Hey everyone, welcome back to Corporate Decoder, the place where we unpack the confusing world of business filings and try to make sense of it all. You know, sometimes these reports can feel like reading a secret code, but today we're going to crack it open and let me tell you what we found might surprise you. Stick around as we dissect the crypto company's latest announcement. Before we start, if you find yourself liking straightforward explanations without all the corporate jargon, make sure you hit that subscribe button. And hey, we've got a fantastic community brewing over on our Discord. Link is in the description below. Come join the conversation. Alright, so what we are looking at today is a Form 8K filing from the crypto company. Think of an 8K as a company's way of telling the public about major events that shareholders absolutely need to know about, and they need to tell people pretty quickly. It's like a flashing red light saying, hey, something important just happened. So, who is the crypto company? Well, based on this filing, the name definitely gives you a clue, right? They are incorporated in Nevada and operate in the world of, you guessed it, crypto. Now, the big news here, the reason for this filing is a bunch of new deals called subscription agreements. Basically, the crypto company has agreed to sell part of itself, its stock, to some investors. This happened starting on the 15th of January 2026. They are selling a massive amount of stock, 90 million shares to be exact. This is a really significant number. When a company issues so many new shares, it can affect how much each existing share is worth. Imagine a pizza that suddenly gets a lot more slices. Each slice becomes smaller unless the pizza itself gets bigger in value. Now, here is where things get really interesting. They are selling 90 million shares for a total of just $100,000. Let's do some quick math. That means each share is being sold for a tiny fraction of a cent, about $0.0011 per S-hair. This is an extremely low price, which usually suggests that either the company is in a difficult financial situation and needs cash urgently, or these shares are being sold in a private deal where the price isn't dictated by the open market. They are doing this using something called Regulation D, specifically Rule 506. This is a way for companies to sell their securities, their stock, to certain investors without having to go through the full complicated process of registering with the government for a public offering. In simple terms, they are selling these shares to specific investors who meet certain criteria, like already being wealthy or sophisticated without needing everyone to get a look. They mention specific investors like White Dwarf LLC, Ryan Crownholm, and Scott Averitt. This type of private placement is common when companies need quick funding but want to avoid the costs and scrutiny of a public sale. Now, the filing also includes a disclaimer about these subscription agreements, and it's an important one. They say these agreements have standard promises and guarantees, but these are mostly legal protections for the people making the deal, the company and the investors. They are not necessarily statements of fact that you or I should rely on as universal truths. This is a common way for companies to say, hey, these agreements are between specific parties for specific reasons, and don't take everything in them as a promise of how great things are. It's a way to manage legal risk. This section just confirms what we've already talked about. They sold these shares without registering them publicly. They are relying on those exemptions we mentioned, and the investors have promised they are buying these shares for investment purposes, not to flip them immediately and drive down the price. They also mentioned that the securities will have special notes on them, sort of like a stamp saying these are not freely traded on the public market yet. So the actual details of how these deals are structured are in an exhibit 10.1, which is the actual form of the subscription agreement. This is where you'd find the nitty-gritty if you were one of the parties involved or a very serious investor looking at the fine print. And here is a quick look at the exhibits they've included with this filing. The main one is that form of subscription agreement, Exhibit 10.1. They also have Exhibit 104, which is the cover page for interactive data. Basically makes the report easier for computers to read. This report is signed on the 22nd of January 2026, just a week after the earliest event they are reporting. This shows they are moving relatively quickly to get this information out, which is good. The signature is from Ron Levy, who holds a pretty important triple title, Chief Executive Officer, Interim Chief Financial Officer, and Secretary. That tells us he is a key figure in the company, and his sign-off means this is official. Now let's put on our Warren Buffett hat for a second. What does this mean for the crypto company? Selling 90 million shares for only $100,000 is a huge red flag. It strongly suggests the company is desperate for cash. In the world of crypto, which can be volatile, needing immediate funds at such a low share price could mean they are facing significant operational costs, or perhaps a downturn in their own crypto holdings that they need to shore up. The investors are getting a massive amount of stock for a relative pittance, which means if the company's stock price ever does recover significantly, These investors stand to make a boatload of money. For existing shareholders, this could be seen as dilutive, meaning their ownership percentage in the company gets smaller with all these new shares issued. It is a double-edged sword. On one hand, the company gets much needed cash to keep operating. On the other hand, the value of existing shares might be pressured downwards. The key risk here is whether this capital infusion is enough to turn things around, or if it's just a temporary fix. Without seeing their full financial statements, it's hard to gauge their exact financial health, but this move screams liquidity crunch. The opportunity lies in these new investors coming in, perhaps bringing not just money but also strategic partnerships or expertise in the crypto space. However, the sheer volume of shares sold at this price points to potential distress. Overall, this filing indicates a company in a critical juncture, trying to survive by any means necessary, with a heavy reliance on private investors willing to take a significant gamble. Alright, that's our deep dive into the crypto company's latest filing. What's your take on this move? Does it look like a smart survival strategy or a sign of deeper trouble? Let us know your thoughts in the comments below. If this breakdown helped you understand what is really going on, please give this video a big thumbs up and hit subscribe for more corporate decoding. And seriously, join our Discord community. You won't want to miss the discussions happening there. Thanks for watching, and we'll see you in the next video.